Today in the grain market, soybeans firmed up. The light gains from technical support really pushed the market a little bit higher yet again. $9 option strike, though, is the one to watch right now. There's almost 12,000 open interest on the calls and the puts for November expiration, which is tomorrow. So the expectation is that that might have a little bit of a pull on the market and make it difficult for this market to break out any further on the upside. That being said, really as we got closer to the end of the day, the market did start to pull back a little bit, and we're almost unchanged right now. But there's a couple of things to kind of take a look at. There is half of the harvest is still in the field in those northern plains. So there's some idea that maybe if the weather starts to freeze up a little bit, it could firm the ground and allow some of the harvest, some of the combines to get out in those fields and collect the rest of the harvest that's out there. So that could be a positive actually for the soybean side to get some of this in. You know, we know that we're still looking for news about the China-U.S. resolution. There isn't really any kind of headline for that today, but tomorrow is Friday, a weekend, something may be coming. I think that this could be the calm before the storm, of course, because corn was steady as well. The quiet trade today really added to the consolidation, moving sideways, and the ranges are really, really tight with corn over the last 4 or 5 sessions. The feed demand for corn is expected to drop like 1.5% this year from last year. That also has kind of stalled out the market. The ethanol production is up. Demand is down, so it's kind of a wash there. That's why there's really no news to get this market off the ground. Interestingly enough, no one's really selling into this and pushing it lower, but that really makes it a little bit more top heavy, just as wheat is. And now today wheat is lower. The range is the same as yesterday, but now we're on the downside. Global demand is the lowest since 1986-87. That's unbelievable. I was very surprised to see those numbers. That makes it everyone a little bit more nervous. The strong dollar also is adding to a little bit of pressure, but not really pushing it all that much. 5 or 6 cents lower today. It really just never bounced back, but we'll have to take a look. November options expiration is tomorrow. Maybe it'll have a little bit of an effect on the grains all the way around. The next support target really for the December wheat contract is 5.10, and we're a little bit higher from that. So it's got a little ways to go before we can really test any support levels. But if we get any more follow through buying, I mean, we could push that market again, but it doesn't look, we're making like lower highs trending for the last 4 or 5 sessions. So it certainly looks like the market has turned somewhat. Notwithstanding some other information coming out that could kind of spark a little bit of a rally again.